whereas this one require a standardization of product. It does not necessarily involve standardization of product. Material cost variance, standard quantity standard rate minus actual quantity actual rate. 620, 12,000 minus 4,000 is 8,000. It is the projection of cost account. It is a projection of financial accounting. Hello, my dear students. I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Cost Accounting, third semester, Unit 4, Session 1 of BCom, in favor of Standard Costing. I am going to explain what is Standard Costing. What are the variances are there? Difference between standard costing and budgetary control. We'll move on. Agenda. Difference between standard costing and budgetary control. Material variance. Here we are going to discuss the problem on material variance, labor variance problems and solution. So, difference between standard costing and budgetary control. First, we are doing the standard costing now. It is concerned with the control of cost or expenses. Where is standard costing? We will finalize some standard. So it should vary that from that particular standard more or less. Here, it is concerned with the operation of the business. It don't bother about this cost. It only means the operation of the business. It is the projection of cost account. It is nothing but projection of cost account. It is a projection of financial account. So whereas standard costing is projection of costing, whereas budgetary control is a production of financial accounting. It requires a standardization of products, whereas this one requires a standardization of product. It does not necessarily involve standardization of product. It should be applied in whole organization. It can be adapted for a section also. Budget is necessary for adopting standard, but standard costing is not necessary. Budget is necessary for standard costing, but for standard costing is not necessary for budget. For budget, standard costing is necessary. For a standard costing, budget is necessary. This is important. For a standard costing, budget is necessary. But for a budget, standard is not necessary. It indicates the minimum target to be achieved. It fixes some target which should be achieved. It fixes the ceiling of cost or expense. It is used on technical information. Standard costing based on technical information. It is based on past record and future. This is important. Past records and future expectations. Standards are set for the expenses only. Budgets are prepared for income only. It cannot be used for forecasting purpose. Standard costing cannot be used for forecasting purpose, whereas it can be used for forecasting purpose, budget. It deals with the variance of elements of cost, material, labor, overhead, and sales separately. So all these variances we are going to material variance, labor variance, overhead variance, and sales separately. It deals with the total variances only. Understand? So this will be asked for 10 marks. So the major question in examination, they are going to ask material variance and labor variance. Variance means how much difference from the standard costing is considered. Come back. We are going to deal material. Material variance has been divided into 3 groups. One is called material cost variance. Number 2, material price variance. Number 3, material usage variance. Which are the 3 in the material cost variance, material rate variance, material usage variance. What is material cost variance? Standard quantity into standard rate minus actual quantity into actual rate. What is the formula? standard quantity into standard rate minus actual quantity into actual rate. That goes in favor of material cost variance, material price variance or rate variance, standard price minus actual price into actual quantity. What is the formula? Standard price minus actual price into actual quantity. Material usage variance, standard quantity minus actual quantity into standard price. So formula, material cost variance, standard quantity into standard rate minus actual quantity into actual rate. Material cost variance, material price variance, standard price minus actual price multiplied by actual quantity. Standard usage variance, standard quantity minus actual quantity multiplied by standard rate. This goes in favor of material. In favor, labor variance has three parts: labor cost variance, labor rate variance, labor efficiency variance. What is labor cost variance? Standard hour into standard rate minus actual hours into actual rate. Then labor rate variance, standard rate minus actual rate into actual hour. First one, labor cost variance, standard hour into standard rate minus actual hour into actual rate. Standard rate, labor rate variance, standard price minus actual price into actual hour. Labor time variance or efficiency variance, standard hour minus actual hour into standard rate. First one, labor cost variance, standard hour into standard rate minus actual hour into actual rate. Labor rate variance, standard rate minus actual rate multiplied by actual hour. Labor time variance or efficiency variance, standard hour or standard time minus actual time multiplied by the standard rate. This you are going to apply for formula. 10 marks question. Material value. They have given standard quantity 600 kgs, actual quantity 400 kg, standard rate 20, actual rate 10. Labor, standard hour 3000, actual hour 2000, standard hour rate 30, actual hour rate 20. We will move on. First one, material variance. Formula, standard quantity multiplied by standard rate minus actual quantity multiplied by actual rate. This is a formula. Standard quantity into standard rate minus actual quantity into actual rate. What's your standard quantity? 600 into your standard rate 20 minus what's your actual quantity? 400 multiplied by 10 rupees. 12,000, 4 followed by 30. This is 8,000. Now, so this goes here. Then you come back. Material price variance. See that? Material here. Material price variance. Standard price minus actual price standard price minus actual price. This is standard price minus actual price multiplied by actual quantity. Come back. What's your standard price? 20 minus 10 into your actual quantity is 400 kgs. 20 minus 10 is 10 into 4 is 4,000. Then material, come back here, labor over material usage variance of material quantity variance, standard quantity minus actual quantity multiplied by standard rate. What's your standard quantity? 600 minus 400 into 20. This is nothing but 200 into 20. For 200 into 20, 4,000. So, first one, material cost variance. Material cost variance, standard quantity into standard rate minus actual quantity into actual rate, 620, 400 days. Material price variance, standard price minus actual price into actual quantity. Material usage variance, standard quantity minus actual quantity into standard rate. Always MCV, material cost variance, is equal to material price variance plus material usage variance. What's your answer? This is 8,000. What's the material price variance? 4,000 plus 4,000. So material cost variance should be equal to material price variance, material usage variance. Now, labor variances. Labor variance, come back here. Labor variance, labor cost variance, labor cost variance, standard hour multiplied by standard rate minus actual hours into actual rate. What is the formula? Labor cost variance, it is called LCV. Standard hour into standard rate minus actual hour into actual rate. What's your standard hours? This is 3,000. What's your standard rate? 30 minus. What's your actual hours? 2,000 into 20. So this is 3 3s are 9 followed by 4 0. This is 2 2s are 4 followed by 4 0. So 90,000 minus 40,000 is 50,000. This is labor cost variance. Then labor rate variance, LRV, labor rate variance, see that? Labor rate, standard rate minus actual rate, standard rate minus actual rate, standard rate minus actual rate into actual hours. Formula, standard rate minus actual rate into standard. What is the standard rate? 30 minus 20 into actual hours is 2000. So 2000 into 10, 22,000 into 10, 20,000. Next. So which variance is over? Come back here. This over, this over. Labor time variance. Labor time variance. Standard time minus actual time see that standard time minus actual time into standard rate. What's your standard time? Standard time is 30. Actual time is standard time is 3000 minus actual time is 2000. Standard time is 3000 hours minus 2000. What's your standard rate? Standard rate is 30. This is 1000 into 30. 30,000. So 30,000 plus 20,000 should be LCV, labor cost variance, is equal to LRV plus labor time variance. What is LCV? What's your LCV? Labor cost variance 50,000. What is labor rate variance? 20,000. What is labor time variance? Labor cost variance 50,000. What is labor rate variance? 20. Various labor time 30. So 50,000 equals to 50,000. So we'll move with problem now. They have given standard quantity, actual quantity, standard rate, actual rate. Material variance, standard quantity into standard rate minus actual quantity into actual rate. Material cost variance, standard price minus actual price into actual rate. Whereas the material usage variance, standard quantity minus actual quantity into standard rate. I have applied here. See that? Material cost variance, standard quantity, standard rate minus actual quantity to actual rate. 620, 12,000 minus 4,000 is 8,000. Then material price variance, standard price minus actual price into actual quantity. What is the standard price? 20 minus 10, 400 is 4,000. Material usage variance and quantity variance, standard quantity minus actual quantity into standard rate. What's the standard quantity? 600 minus 420. So this should be equal to this. MCV should be equal to MPV plus MUV. MCV is equal to MPV plus MUV. Labor cost variance, standard hour into standard rate minus actual hour into actual rate. What's your standard hours? 3,030. 3,030, 2,020. It comes to 90,000. It comes 40. Difference is 50,000. Labor rate variance, standard rate minus actual rate into actual hours. What is your standard rate? 30. Actual 20 into 2 is 20,000. Then labor time variance, standard time minus actual time into standard day. What is the standard time? 3,000 minus 2,000 into 30, that is 30,000. So LCV should be equal to LRV plus labor time. What is your LCV? 50,000. What is your LRV? 20,000. What is the time? So they should be equal, means the problem is correct. So I have solved time variance, that is material variance 3 time, and what's called labor variance. And I bring out the difference between standard costing and budgetary control. So what's this is? It indicates the minimum target to be achieved. It fixes the ceiling cost for expenses. It is concerned with control of cost or expense. It is concerned with the operation of the business. It is the projection of cost account. It is a projection of financial accounting. It requires standardization of product. It does not require. It should be applied in whole organization. It can be adopted in section also. Budget is necessary for adopting standard, whereas standard is not necessary. Whereas budget standard costing based on budget is not based on here. Standard costing is not necessary. It indicates the minimum target to be achieved. It fixes the ceiling cost or expense. It is based on technical information. It is based on past record and future expectation. Standards are set for the expenses only. Budgets are prepared for income only. It cannot be used for forecasting purpose. It can be used for forecasting. It deals with the variances. It deals with only total variance. It deals with material variance, labor variance, overhead, and sales. Now, from the examination of point 2, they will ask material variance and labor variance. Material variance has 3 parts: material cost variance, material price variance, material usage variance. What's the formula? Material cost minus standard quantity into standard rate minus actual quantity into actual rate. Material price variance, standard price minus actual price into actual quantity. Material usage variance, standard quantity minus actual quantity into standard rate. Then come back. Labor cost variance has 3 divisions: labor cost variance, labor rate variance, labor efficiency variance. What is labor cost variance? Standard hour into standard rate minus actual hour into actual rate. Labor rate variance, standard rate minus actual rate into actual hours. Labor time variance or efficiency variance, standard hour minus actual hour into standard rate. I solved the problem also here. Material, all the problems has been solved here. Hope you understand. I solved the problem on material variance. I solved the problem on labor variance also. Tomorrow we'll have, in the next session, we'll have 2 more problems on standard costing. We'll bring the question paper and answer. So definitely from the examination of point 2, it will come for 10 marks. Hope you understand. We'll meet tomorrow in the next session, another 2 or 3 problems. Till then, goodbye. Meet in the next session.